So everyone keeps asking the exact same question. When will the Perth property market finally peak? Because you're never going to get a headline that will tell you that this is the top. You'll only find out once it's already occurred. So in today's video, I'm going to show you the exact data signals that will reveal when the Perth property market is finally running out of steam. And that's before anyone else can even catch on. And if you understand these exact signals, you will know not just when to buy, but also when to stop chasing the hype. And you're going to want to stay right until the very end of the video, because the final signal that I reveal has predicted every single perf slowdown in the last 20 years. Guys, my name's Josh. I'm from DataEdge Property, and I help everyday Australians navigate the Australian property market using data. Data that's accessible to absolutely everyone. And if you get value out of today's video, make sure you smash that like button. It helps everyday Australians see data-driven content just like this. And with that said, let's jump into where Perth sits right now. So according to REIWA, Perth's median house price now sits at $810,000. That's a record high, and that's up 3.1% in the last quarter alone, or even higher if you look at the most recent Cotality daily indices data. What about listings? Well, there's only about 2,800 properties on the market right now, and about half of those are houses. That's roughly 35% fewer listings than same time last year. What about sales? Well, weekly sales currently sit at around 750 to 800 transactions per week, meaning that there's under 4 weeks of supply if you compare that to the number of listings on the market. Now, coming back to listings for a second, a balanced market sits at about 15,000. So at the moment, we are chronically undersupplied, and that situation seems only to be getting worse week by week. So Perth's definitely running significantly hotter than any other capital city right now. But the real question is how you know when that heat starts to turn into steam. And to understand that, let's look at the cycle story, because almost every boom, no matter when it happens, follows the exact same pattern. Firstly, you have quiet confidence. And to use Perth's recent boom as an analogy, well, we're looking back at 2019 to 2021. And during this first phase, you see the smart money move in early. That's before anyone even knows that this market's about to take off. Secondly, you've got the momentum phase. And we've seen that from 2022, even up until early this year and right now. In the momentum phase, you see migration surges, you see sentiment snowballing, and everything on the ground is simply bonkers. And that's exactly what we've seen in Perth in the last couple of years. Lastly, you've got the maturity phase. And I truly believe that this is where we are at right now. The question is, when is that phase going to conclude? And in this part of the cycle, you typically see optimism become strategy, and the easy wins, they're simply gone. As an example, investors were chasing Perth in the last few years primarily due to its extremely strong yields. Well, there are certainly 5% yields still out there in the market, but you have to be super selective and data-driven to uncover it. Whereas a few years ago, you could have literally just thrown a dart at a map and you would have found a high-yielding, high-growth suburb. That's not the case anymore. And when this easy money stage ends, history shows us that the market always shifts gears. And that's exactly what's happened in Perth before. So with that said, let's have a look back, because Perth's previous booms tell you everything that you need to know about how this one is likely to end. So what do the past cycles tell us? Well, back in 2006, Perth doubled in 4 years, and then it flatlined for nearly a decade. Again in 2013 to 2014, a short and sharp upswing cycle was followed by years of sideways movement. And each time, the market left the exact same fingerprints. Listings rising, rent growth cooling, and buyers suddenly having choice again. And the thing is, those same clues, they always appear before the top, never after. So what are we seeing this time around? Well, let's have a look at the early warning indicators that matter right now. Well, here's what the latest verified data shows us and what we should be watching next. So firstly, let's talk about time to sell. And REWA reports that the median time to sell a house in Perth has dropped to just 9 days. And that's down from same time last year when it was at 10 days. And just for context, when a market has days on market that's under 30, that's typically considered a warm market. So when we're down at 9 days, that is effectively nuts. The conditions on the ground are red hot. Well, what about rents? Well, median rents, they've held steady, growing only from $650 a week to $695 a week, or 7% in an 18-month period. And what we're seeing on the ground is that higher end properties are taking significantly longer to lease, which is an early sign of cooling demand. And when you combine that with the yield story, where Cotality is showing that gross rental yields are now at 4.2%, which is down slightly from a year earlier when they were at 4.6%, it's certainly a sign of a market that has some elements of cooling. So it's definitely a strange mix. Perth is selling faster than ever, but the rent and yield data are flashing the first quiet warning signs, and that split could tell us exactly how this cycle might end. And if you want to learn how to assess individual properties the same way I do, then grab my free property due diligence checklist in the description box down below. It walks you through how to compare suburbs, evaluate land quality, zoning, tenant demand, and long-term growth potential, so you can avoid the common traps that catch most investors. Now, despite those early signs of slowing, Perth's market still has something that most don't, and that's extreme undersupply. And that's why I call this current stage that we're at in the cycle the false summit, because Perth could still have room left to run. And there's a combination of factors that are fueling this undersupply. Firstly, you've got population growth, which is currently running above 3%, the fastest anywhere in the country. Secondly, you've got resources and infrastructure projects locking in multi-year employment, and that's attracting people to Western Australia and Perth specifically, and those same people place additional demand on housing. Thirdly, you've got land releases, which are 40% below 2014 levels, and at the same time, the population is significantly larger. And if we see interest rates continuing to ease in 2026, well, borrowing power is going to get another kick. So while some of the metrics are certainly cooling, the structural forces are still pushing hard, and that's what's keeping this second wind in Perth alive. But every second wind has a limit. So let's talk about how we're going to know when Perth has finally run out of air. But before we do that, if you want to see how Perth stacks up against another fast-moving market, check out my Brisbane 2026 market summary video right after this. Brisbane's market is tracking about 12 months ahead, and comparing the two markets can show where investor demand and capital could rotate to next. You'll find that video linked on the screen and in the description box down below. So with that said, how do we actually know that Perth is at the top of its cycle? Well, to do that, let's have a look at what happened each time before. So firstly, with the 2006 peak, listings surged from 10,000 to 17,000 in under a year. And at the same time, sales volumes dropped by 30% and days on market blew out from 14 days to over 40 days. And this all happened at the same time that rents flattened within months of peaking prices. Well, what about the 2014 peak? Well, at that time, listings rose from 10,500 to 15,000. Weekly sales fell from 1,000 per week to 600 per week. And this all happened as rents softened 6 months before prices did. Now, let's fast forward back to today. Listings are at 2,800, which is near a record low. Sales volumes, 800 a week. And finally, rental growth is between 7 to 8% per annum with yields in the mid 4s. And to give you a context of where we got to with yields in the last cycle, they got as low as 3.6%. So Perth today looks nothing like a market that's topped out. It looks like a market that's still running on fumes of undersupply. And that's exactly why I call this a second wind market. The fundamentals that ended previous booms, they're just not here yet. But we're definitely higher up the mountain than before, and the summit is definitely in sight. We just might not get there for a couple of years. Now, if you're finding this video helpful, please hit the like button and subscribe. It really helps more Australians cut through the noise and understand what's driving our property cycles. So with all of that said, has Perth hit its peak? Well, not yet. It's in a powerful second wind, driven by record low stock and population growth. But that said, we're well up the mountain now, and strategy matters more than momentum at this point in the market. Remember, every cycle feels unstoppable before it isn't, and the people who see the turn coming aren't the ones with the loudest opinions. They're the ones that actually watch the numbers. So with that said, guys, I'm Josh from DataEdge Property, helping you navigate Australia's property markets. I hope you got value out of today's video, and I'll see you in the next one.